The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Become a Pro course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
So let's delve into the economy of Switzerland. Okay, it's one of the wealthiest countries in the world. We'll start with that, of course. It has its own local currency, the Swiss franc. Okay, no other nation uses this currency. 1 Swiss franc there is equal to 1,00894 relative to the euro, of course. And this changes. It's roughly around 129. Relatively low inflation with low unemployment at 3.1%. The financial crisis there, 2009, gross domestic product declined in real terms by just under 2%, 1.9%. Then in 2010, the GDP increased again by 2.6%, so quite significant in terms of its recovery story. Nestle, UBS, AG, Credit Suisse, Novartis and ABB are the largest multinational corporations. They have their headquarters in Switzerland. Politically, it's a very stable country with domestic currency regarded as a safe haven. Okay, so safe haven currency, again, which we'll discuss in later lessons, is where you see capital flight move towards that currency or an increase in demand for that currency when times are unstable or market conditions are experiencing a level of uncertainty or heightened risk. Okay, and Swiss gross domestic product at 659.8 billion US dollars, and that's there 2016. Okay, so it is quite a strong economy in terms of the GDP it creates each and every year. Okay, one of the main factors contributing to the Swiss economy, as we delve into the export factors and economic sectors of the economy, is that there is a certain Swiss export phenomena. Okay, Switzerland is a world leader in the manufacturing and production of its own goods and services, specifically for international export markets. Okay, it's quite a small nation, but creates a lot of goods and services for international export. The operating system of this structure of the economy therefore creates a definitive trade surplus, enabling it to be one of the most competitive open markets in Europe, and I would say essentially the world. Switzerland establishes strong trade relations among its major trading partners, clear to see when observing trade surplus, and that's what we can see here to the right. Okay, we have marginal Swiss trade balance again with a surplus across different nations. Okay, so let us highlight in some detail what this actually means. Well, this is the total level of surplus here. We're over and above 10%, so around 12% surplus across to other competing nations, of course, in terms of trade deficit. We see that it has Germany actually has a surplus over trade deficit with Switzerland itself, but it's yet really the only country, Italy as well, a small minus. But you can see the level of business it conducts there in terms of the trade with the UK, Russia, Latin America, and Japan, again across to the US and the Middle East. Again, the overall factor is the trade deficit is actually at 12%, which is a huge figure for such a small country that creates a lot of these goods and services. A key question to ask as a trader is how the structure of this economy facilitates the success of companies like Nestle, Novartis, and Roche Holding AG. Okay, so if you're an equity trader, you're going to be dependent on the success of this export phenomenon. Many companies therefore do. Here we see the balance of trade effectively across different months of the year. In March 2018, the value of exports amounted to 19.36 billion, while imports, although increasing 5.4 billion, accumulated to a total of 17.05 billion Swiss francs as well. So even with this huge monthly increase in the Swiss economy, manages a trade surplus of 2.32 billion. Okay, that's on one particular month, and that's on one particular month when we've seen a massive increase actually in the difference between the trade balance between Switzerland and the rest of the world. So it shows you, in other months that it's exceeding the amount of export that it's actually taking in. The amount of value created from export markets is absolutely huge for such a small nation, and that's why we say that Switzerland really runs, with a phenomena of export trade relations. Here we can see some really high values here. We have over 4 billion Swiss francs added in terms of import value from those exports across to different nations. Okay, so really creating a lot of value in terms of its trade relations with its neighbors. And again, what factors is this going to have on the local economy? What sort of factors is it going to have for the local currency? What sort of factors is it going to have if you're an equity trader and you're looking to trade these large export companies, like perhaps a Swiss, Swatch, I believe, is a large exporter of Swiss watches, again doing most of its business not only in Switzerland but across the world. Okay, so it's absolutely huge in terms of the trade balance that it creates. Let's move on then to important trade related factors. Okay, so Switzerland itself, it's surrounded by the Eurozone, neighbors of whom are all benefiting from European Central Bank stimulus. Switzerland relies completely on its own monetary system to remain competitive. Okay, it's hard to overstate just how desperate Switzerland is for decisive changes in interest rates from its European counterparts. Okay, now why might that be the case? Given its massive and consistent trade surplus, it has continued to battle with repressively strong domestic currency. And this makes it very difficult to compete in many industries. Okay, and that's why we have some very strong local economic sectors, particularly if we focus in on Switzerland. We know that they have a very strong pharmaceutical sector because, of course, they can compete. They're doing a lot of business. Of course, that's how they compete, by creating all this produce in Switzerland and selling that on to the export market for a severe profit. The SNB has been forced to impose some of the lowest or most negative interest rates to maintain its currency. Considering how crucial the performance of the financial sector is for the Swiss economy, its banking sector is therefore not able to offer attractive interest rates on capital investment. So you can see, although the banking sector and finance is leading the way in Switzerland, of course, as a contributor for economic growth, it is under the thumb, under the threshold of the Swiss National Bank, because they're keeping interest rates very low to reflect or manipulate the local currency to keep it competitive. If those local banks could actually deliver or offer very, very attractive interest rates across the financial sectors, that would attract a lot of foreign investment into the country and actually increase a higher demand for Swiss francs as a currency. And what effect is that going to have, of course, in the currency? Well, it's going to increase or inflate the value of that currency. So there's a lot going on here in terms of the monetary system, given it runs its own monetary system as across to its own neighbors with the European Central Bank parties and nations. It has a lot to work with in terms of its trade surplus as well. So let's delve into foreign trade itself. Why is it so important? And we can see, of course, over a large sector of economic sectors of this economy where it derives its value. The observation of key export goods also provides insight into the operational impact of the top performing companies in the local economy. So I'm hoping that at this moment, we're going through this insight into Switzerland, but you can see how that you can derive and apply this knowledge to any particular market that you're interested in trading, whether it's a local equity index or you're studying one equity within a particular nation that you think has value, of course, and is adding value to that economy. In 2015, the foreign trade of chemicals totaled a whopping 84,685. Again, that's in millions Swiss franc, larger than all key goods combined. So again, I discussed the importance of Novartis, pharmaceutical companies and healthcare companies. That's effectively what we can say with this chart. Healthcare and pharmaceuticals are, of course, large contributors to the economy, with multinationals like Novartis leading the way. Okay, so the Swiss Market Index, which is the SMI 20, all made of blue chip components, is effectively the primary index. We have some huge companies in there, huge pharmaceutical companies, contributing not only to output added, but to employing the workforce of Switzerland, and to really increasing wage growth across Switzerland, and many other economic factors that's providing growth here in the local domestic economy. And much of this growth is a direct result really from foreign trade that it's doing in terms of its global export markets. Again, just to reiterate, this is the figure we see for Swiss francs in terms of the overall foreign trade of chemicals totaling a larger amount than all key goods combined. So can you see how significant that is for Switzerland? All key goods combined, just with this figure here. Okay, so let's move across then to discussing how important a sector value really is in Switzerland. Again, we can take the example in Swiss francs there. Switzerland is one of the leading global financial centers, most particularly here in Europe, but of course in the world. And in 2017, it was yet again one of the most competitive financial centers there. Both Zurich and Geneva are ranked in the top 20 global financial cities in the world. The financial sector consists of the banking sector and the insurance sector, contributing to over 60 billion Swiss francs in gross value added in 2017. 60 billion Swiss francs from one sector, that's absolutely huge. The financial sector contributes to around 10% of total domestic value creation, above average when comparing to other European countries. Again, this is effectively what we see here in this pie chart to the right, the total effect of financial sector, of course, 12.9% in 2017. It's a huge figure relative to other economies. So you can see the value being created by one single sector. So to put this in total contrast, again, we studied a little there on the financial crisis and how that led to the systemic downfall of global markets there in 2009, but that was a US problem. Again, if we understand that the level of output or sector value that the financial services sector in Switzerland is creating, not only for Switzerland, because obviously there's a lot of foreign investment and trade going into this level of investment in this sector, you can see if that were to collapse or have some sort of serious downfall, how that would cause problems for overall growth, not only in Switzerland, but across the Eurozone as well. So let's break down the economy of Switzerland itself, and we'll go through different levels of sector analysis. Okay, so we have financials, 21.6% of value added to the economy. And again, I'll just highlight this as we go along. Telecommunications is relatively small, of course, with 1.4%. Healthcare, 37.5%. Healthcare contributes to the economy of Switzerland. Okay. Basic materials, so you can see again, we're starting to build a bigger picture here. 1.8%. It's quite small, really small, in contrast to a country like Australia, where it produces a large amount of mining resource and natural resourcing from basic materials. It's I believe over the figure of 20% adding value to that economy. So you can see how important economic performance of those sectors are for different local economies. Industrials then 13.6%, and consumer goods 24% value added to the economy. Okay, so let's go through some points here. We have healthcare, consumer goods, financials are the economic sectors of value. Which sectors are lagging? Well, of course, those that are not producing or contributing to a lot of value in the economy, but they of course serve their purpose. The financial services sector is a huge contributor to the Swiss economy, and 21.6% of the blue chip Swiss market index. That's the SMI index here. Okay. Nextly, of course, we're just choosing one company that we're familiar with because it's the largest component within the SMI 20. It's in the sector of food and beverage again, so we'll classify that under consumer goods. Of course, it is. It has a weight within the SMI itself of 23.42%. So 23.42% within one equity index. That's huge, astronomical. And revenue itself in 2017 is 89.8 billion Swiss francs in one annual year. Okay, what is the second biggest company there by constituent weighted value there in the SMA? It's Roche Holding AG, component at level 2, of course. It's in the health sector. Again, the health sector is huge. It's actually the largest functionable value-added sector of the Swiss economy, contributing, as we said, 37.5%. It has a weight of 18.92%, contributing 53.3 billion Swiss francs. So are we seeing how important some single equity stocks are for one particular economy? So if we were to divide the Swiss economy and pick it apart piece by piece, well, we have effectively healthcare, consumer goods, and financials totally overruling or dominating this economy. Again, if you want to break it down to the SMA makeup of the most contribution or the most contributing companies by far in terms of growth or gross domestic product, well, we can see that Nestle is contributing 23% and Roche just under 20%. So just under, again, collectively 40% of gross domestic product for the economy of Switzerland for the SMA 20 is not absolutely huge. So it's so important to understand the makeup of these equity indexes, what they mean for each economic sector, how those economic sectors promote growth and add value, and how we can actually look to exploit these changes between either under or over performance of an equity index or sector in relation to that local economy. So as we look across and breaking down the economy of Switzerland by observing the Swiss market index, this will give us much more insight to trading the price of the Swiss market index or other asset classes. So here we have the SMA 20, the Swiss market index. It's totally tradable, of course, as a CFD, and we can trade it as a futures contract, and we can trade it with many different derivatives, of course, as well. So let's start from the beginning. Of course, we have number one, Nestle. Again, food and beverage, it's 23.42%, adding huge value to the economy. As we move across, we discussed then Roche Holdings, just under 19%, contributing to the Swiss economy. As we go down again, we have number 3 there, Novartis, contributing 18.20 again. Number 4, we have some banks in the banking sector, UBS Group. So we're probably aware of UBS Group as a large insurer and is a big player in European finance. And then we have industrial goods, ABB, contributing just over 4% to the economy. And as you go down, you can see chemicals, personal goods, again, contributing large portions of output to that local economy. So we're going to know that there's going to be an effective move in the equity index if we want to trade the equity index related to how these shares or sectors are actually performing. Okay, now what I'd like to do is really bring that into context with you. Again, I always like to focus on how we can take advantage of this as a trader in terms of trading these markets. There's really no point in understanding all the economics behind economic sectors and sector analysis if you're not able to position yourself to make money. So let's look at the Swiss equity index. Again, the Swiss market index, the cash price we know is moving all the time. It's the cash markets opening from 8 o'clock or 9 o'clock European Standard Time, of course, to 4:30 closing times. And we have the cash market price there and the CFD reflective price there. Again, we can trade it as a CFD asset. So the tradable market price is simply relative to the weighted average prices of the 20 blue chip companies in the SMA market index. So did we know that, guys? That's the question I would like to pose. Of course, did we know that? I can just scroll back here to our 20 constituent components within this SMA 20. Effectively, the tradable price of the SMA 20 is a weighted price of these 20 companies, their value, their market cap, and collectivized. Okay, and we can trade this overall to look to profit. Of course, there's much more sentiment analysis and different varied factors that go into pricing the equity index, but we can boil it down to how these 20 companies or equity markets are performing, these single stock equities are performing in relation to the Swiss market. Okay, So a question again is how do we like to trade this again? How can we actually use our information to trade these markets? Okay, so we know that Nestle is 23.42% of the SMA market index. Okay, 23.42%, a huge figure for one particular stock, one particular equity to have an reflective component weighting of the stock. Okay. How can a price swing in the share price of Nestle then affect the market? Okay, so if some news comes to the market, we know that we can properly try and disseminate that data to say, well, if there's going to be a relative move in the share price, we can physically see the share price move, of course, and it may close 5% higher or 5% lower on the trading day. How can we price that into the markets? Again, all market participants are looking to price in their analysis to make trades. So how can a price swing in the share price of Nestle affect the market in question? Well, Nestle's current share price is 76.98, okay? 76.98 Swiss francs, okay? In expanding its global operations, Nestle offers 120 million Swiss francs of newly issued shares to the market. This effectively is going to dilute the share price because we're flooding the new market with new shares. Of course, there's going to be a debase of those shares. Those share owners are more likely going to receive for each share they own an additional share if we're going to increase a share per double. And there's going to be a level of participation between shareholders and of course Nestle in arranging this. However, because there's such a new supply of shares into the market, let's say hypothetically current ownership is diluted and causes a 10% drop in the share price. Okay, so we know that the share price is 76.98. We're going to see a 10% drop in that share price. Again, how can this swing affect the price of Nestle? Well, a 10% drop reprices Nestle shares from 76 the whole way there to 69.29. So we see an effective move in the share price there in Swiss francs, a drop of 10%. Nestle's new share price is 69.29. The drop in Nestle also represents a 10% drop in Nestle's weighting on the SMA index. So does that make sense? We know that it's such a strong company in terms of pricing, the component pricing of the Swiss market index. But not only is a 10% share reflected in the price of the actual equity itself, Nestle, a 10% drop in Nestle also represents a 10% drop in Nestle's weighting on the SMA index. Okay, so its own 10%. So we know that 23.2% of the value of the SMA is attributed to Nestle. Simple calculation will tell us that, well, we have a derivation of 2.342% of a change in the equity pricing, okay? This is effectively what we're going to see. We're going to see a price change and trading opportunity. So the current CFD price, we'll use the CFD market to trade this. The CFD price there is 87.99. Therefore, the drop in Nestle's share price as a result caused a 2.342% drop in the equity index itself. Okay, and we do the calculation there. Simply, we see a 1% increment change relating to minus 205.60. Okay, and then we detract that from the overall value. Then the 2.342% drop in Nestle as a weighting constituent of the equity index itself leads to a repricing of the share at 8,573.40 for the index itself. So that's our new price. That is our trading opportunity, and that is effectively what we're looking to do. We can reprice that in as the market, as that news shocks the market. We know that we're going to get a very strong sell-off in a debase of these shares. How can we look to overall reflect that in the Swiss market index again? And this is relative to trading, all of these different examples as new equity news comes out into the news flow. Again, I had a previous example during the lesson of the huge extent of the move in the price of the FTSE 100 in relation to the Deepwater Horizon issue that BP had, of course, in 2010. So that is effectively how we position ourselves as traders. We're there to exploit our knowledge of the markets. We're there to understand economic sectors, how they can misprice assets. If one sector is adding a large amount of value to the economy, well, that economy is exposed to that sector and vice versa. If one sector is, of course, underperforming and is not adding value, but is important, that economy is going to be lagging, of course. So in our case study conclusion, of course, identifying the sectors which contribute most to the local economy indicate exactly which sectors are crucial to promoting growth, employment and business, and identifying those weak sectors of the economy outline to us which sectors are draining resources from the economy. Sector analysis also allows us to see how much the economy relies on individual sectors, finance, retail, oil and gas, while also highlighting what type of business dominates the makeup of the equity markets. And sector analysis demonstrates and explains how important the value of the local currency is and how large fluctuations can create drastic changes in trade relations, competition and government policy. Okay, so we explained this is all making up the overall weighting of an economy. It's not just one particular stock within an economy that overweights the sector, of course. Government influence and trade flow, competition or the price of the currency, all of these are relative to sector performance or underperformance, of course, and we need to price all of these moves in as traders. Again, it is more conclusive to a level of fundamental analysis, but knowing that there is going to be a strong price move because new news or information is released to the market could allow you to make a completely technical trade. Again, with the fundamental analysis, with the previous example of simply repricing the SMI, that is something you can do in a few minutes given the price of the share move. So let's conclude the lesson with the lesson summary then, because there's a lot to take in there. I do realize economies across the world are heavily invested in many different sectors. Again, I'd like to use the NASDAQ 100 just particularly to show the strength of the US market, the US equity markets at the moment, because they contributed overwhelmingly, or 6 particular equity markets within the NASDAQ 100, including Amazon, Facebook, Google, contributed hugely to that overall sector performance and began to dominate the economy for a while. But they're effectively adding value to the local economy. Sector analysis transgresses over asset classes to allow us to better understand the economic functions of markets. Where Switzerland has one single company that makes up 23% of its main equity index, UK is highly exposed to financial services, where Canada is exposed to fluctuating oil prices, Brazil is over-dependent on the coffee trade. And again, so it certainly transgresses over asset classes as well. I just use Switzerland because it's such an important trading nation. It has its own currency. It has overweighing factors in terms of cyclical movements within the economic sectors and overall dominance of economic sectors as well. So a good example to use, but you can trade based on, oil prices as well will affect the Canadian economy and the Canadian dollar, and more exposure to your education on this subject will of course enable you to make such trading decisions. And many economies and currencies rely heavily on sector performance. It is our job as traders to understand how asset prices will react to relative change in sector performance and to react to exploit the changing market environment. Okay, so that's our job. Our job is to position ourselves the best we can to make money across asset classes. So in understanding the movement between finance, between sectors, whether it's a growth story or not, we can better position ourselves to actively trade these markets for profit, of course. Okay, so that concludes today's Become a Pro lesson, of course, really getting very heavily into sector analysis. Now, we will start to develop a lot of these theories in much more detail as we progress through some of those lessons, so do enjoy and look forward to those lessons. And I'll let you go then. I look forward to seeing you at the same time for lesson 7 tomorrow. Do enjoy the rest of the day and good luck trading the markets, of course. Thank you very much for joining us here at Forex Academy. We'll see you next time. Bye for now.